Good morning to all Dekel Agri-Vision shareholders and prospective shareholders. This is Lincoln Moore, Executive Director, podcast 10, today to talk about the production for the year end and also a bit of outlook information as we move into the upcoming high season. First of all, at the outset, of course, it's exciting for us for the first time in 3 years to be operating in a supportive palm oil price environment, and we'll get to that in a second. There's a huge amount of information, I think, in this production update. So I'll just touch on what I think are the main drivers here. I think we touched on rainfall in the second half of the year. Rainfall was significant through September, October, and even into the start of November, almost 3 times what we normally expect, and that had a number of impacts on where the production was for the year end and how we see things moving forward. We saw normally in October and November is typically a little bump in production, a second sort of mini high season, but the high level of rainfall no doubt had an impact on the ripening of the fruit through that period, and we saw weaker yields coming through than what we would normally expect. And we saw, smallholders were operating at that point in time, particularly in September, and pretty weak price environments, and into October, as it started to increase, start to scramble to provide fruit. We saw very weak quality of fruit, which also impacted the extraction rate through October and November. Extraction rate moved down to around about 19% during that period. December saw some normalisation. Fruit levels were fairly much in line with the prior year, and the extraction rate moved back up to 21.5% in December, which is a pretty strong extraction rate number for a low season month. So things normalised during that period. Of course, the rainfall also had an impact on a small impact on our cashew program. High rainfall through October and November meant there were small delays in land clearing, but that's all really taking shape now. So we saw land clearing completed, and you see pictures on our Twitter account, and we're now in the process of shipping key equipment from Southeast Asia in terms of the infrastructure and anchor equipment for the foundation work, and concrete work will also start shortly. From Italy, the milling equipment is coming along well and scheduled to be delivered over a number of shipments starting in March and April through the first half of the year. So we'll be eager to show all shareholders pictures of some of this activity going on over the coming months, and we should see a really strong move forward in terms of the construction process of the equipment as we aim to be producing cashew by the end of the year, and then start of the following year being really the first full year of production of cashew. In terms of the high season, going back to palm oil for a second, the rainfall had some impact, we think, on the timing of the high season. We're looking at agronomists have been counting bunches over the back end of the year. What we're seeing is good, strong bunch numbers coming through, albeit a little bit less mature than they would normally typically be at this time of year due to the high rainfall and cloud cover associated with the October-November rainfall. So we think maybe we'll see the high season be a little later. Maybe the peak month we suspect now will be April rather than typically March, but over the full 6 months we're expecting production to be very good, and certainly aiming to be at least in line with our 6-month production for last year. So it obviously bodes well with prices being where they're at presently. In terms of prices, it's been quite staggering, really, the increase. We a few months ago were at $500 a tonne, and on Friday at $872 a tonne. It's been an amazing shift in prices. I mean, in terms of some guidance as to where we see prices going from here, there's a mixed bag in terms of supply and demand drivers. We saw Malaysia release its December production numbers on Friday. Another very weak month of production out of Malaysia, which is the best proxy available for palm oil worldwide production, 13% down in December, and we saw stock levels of palm oil in Malaysia at 27-month lows, currently sitting at less than a month's demand. So it looks like we should see a continuation of reasonably tight supply in terms of palm oil, which should be supportive for prices. USDA also released some data downgrading palm oil production for 2020. Not particularly surprising, I think, after 2 years of weak prices, and then therefore this normally flows into weak fertiliser usage, that we will see a period of sustained weaker production, possibly out of Southeast Asia over the next 12 to 18 months, which should also be supportive of prices. On the other side of the coin, India and Malaysia, there's continuing political discussions going there, which may impact India demand over the next month or so if things don't de-escalate. So that may flip things on the other side, and we're obviously also looking at biodiesel usage closely, and I suspect we'll get some data out of Indonesia in terms of their increase in biodiesel, which of course palm oil will be the main feedstock since they've moved their percentage of biodiesel up from 20 to 30%. So that should be quite a strong demand. So a mixed level there, but I think overall we're looking to be in quite a strong palm oil price environment for the entire 2020. Whether it increases further or whether there's some minor softening is difficult to determine, but certainly prices at $800 and above through the year would be very supportive for our business. In terms of us specifically, we're starting to see that price move into our own local prices. Our price locally, of course, we mentioned the announcement, lags the international price for 5 to 6 weeks. So we're seeing prices in January at $730 a tonne, and it's almost a lock at this stage that we'll see a material lift in prices in February, given the current price of palm oil where it stands today. So as we move into the peak periods of our high season, we're looking it's looking very positive. We'll be doing that in a very supportive palm oil price environment. So in terms of overall, I think a goal for us, of course, is to move back to at least 2017 financial numbers, where we did over 30 million euros of revenue and nearly 5 million euros of EBITDA, and hopefully exceed those numbers for 2020. So looking like a really positive financial year for us, provided, of course, that production at least remains reasonably steady with last year, and hopefully is a little higher, of course. In terms of the cashew, I think it's an exciting period where we will have a period of construction going on, but moving into another leg of revenue from 2021 onwards, which is the revenue line is not dissimilar to the palm oil line, and the EBITDA line could potentially be higher once the business stabilises. So we're looking at a business with really strong EBITDA growth, we believe, over the next 12 to 18 months, and we look forward to providing shareholders with updates on the high season and progress of the cashew project in particular, as well as other projects over the coming months. Thanks very much.